I hope you're ready to get into some stocks that have some insane upside ahead over the next few years. 4 stocks I'm buying now, September 2024 edition. Welcome in, folks. I do this video for you guys each and every month, getting into the stocks that I'm planning on buying in the current month, which now is September of 2024. Going into this month, public count a little under $2.3 million, feeling very good, very happy. Going into September here, things are looking pretty darn good overall for the positions I'm in, and got some insane upside stocks here to share with you in this video and why these stocks have such immense upside over the next few years. I appreciate y'all joining me as always, and if you didn't see it in the first part of the video, all I need from you guys for this video here today is to smash that like button and hit the subscribe button if you're not already subscribed, okay? Listen, if you need help on all this stuff we're getting into here today, you need help understanding balance sheets, income statements, getting more confident when making your decisions out there, right? All those sorts of things. If you feel like you're just gambling money in the market, right, and you need to feel like confidence like I have when I go to start a position, then check out the pinned comment down there. You can click on that, fill out an application, and join my private stock group, my private wealth group, and also get access to 1000xstocks.com, okay? We'll see if we can get you access to that maybe next week or the week after. Alrighty, guys, so first stock up here of these 4 stocks that has some pretty insane upside ahead is the Planet. The time has come for this stock once again to begin to rise from the ashes. And oh baby, is this one going to be a fun ride, okay? This is a stock that I believe is going to be a $5 to $10 stock long term in regards to this one, and it's 50 something cents here today, okay? Now, the Planet is a company that this year has basically pulled a reverse Uno card. This is a company that it looked like everything was just going bad and bad and bad and bad for this company. And this year, as this year has transpired, they basically pulled this reverse Uno card and everything is starting to switch positively for the company. Thing after thing after thing, and this is going to continue on through the end of this year, and it's absolutely magnificent, okay? Now, in order to understand why this company has so much upside ahead, you've got to understand the history behind this company. It all started with this store that opened in late 2018. This is a superstore for Jack Jackson. If you don't know Jack Jackson, you'll know Jack Jackson by the end of this video, okay? And this particular product obviously is insanely popular. We all know that, right? We do have legalization going on out there, state by state by state. We'll speak about federal legalization in this video as well, okay? But basically, this superstore, one of the most exciting things the most exciting store to ever open in the history of this particular space, right? Right outside the Las Vegas Strip, right behind Fashion Show Mall, very close to the Wynn and the Encore and some of the best properties on the Las Vegas Strip. It's all within walking distance of that. So the store opens, very exciting. The business starts building, right? And then suddenly they're forced to be closed down in 2020. The government said, hey, listen, you guys got to close your store. We're closing the entire Las Vegas Strip. Something you never thought could happen. You always think about recessions and these sorts of things. What about no one's allowed to come, right? That's really fascinating. And so a lot of people thought this company was going to go bankrupt in 2020 because of that, right? Well, the company pivoted to delivery. They pivoted to the more local market. And then when they did open back up, business started to build again. Then the business went absolutely crazy at the end of 2020 and into 2021. We all know those days. They were the stimulus days, massive amounts of drive-in traffic from California. And the business went, to stratospheric levels. The lines to get in were ridiculous, right? Then 2022 and 2023 happened, which were absolutely brutal for the business. The stimulus money went away, and then there was a price war inside the state of Nevada for this different market. Margins got hit, business got hit. Obviously, the consumer got destroyed by inflation. It was ugly, ugly, ugly. Now, what we've seen in the first half of 2024 is stability in the business model and getting back to growth. In the second half, we're going to see crazy growth coming for this company. I mean, crazy growth. And there's a few different reasons for that. One is it starts with the superstore. They have, in the past few months, they've completely transformed the superstore from a place that was moderately busy to all of a sudden now it is packed. Pretty much day in and day out. And the reason being is back in the springtime, they opened this Dazed Consumption Lounge, which think of it kind of as a bar, but for Jack Jackson, okay? And so you go in there, you're able to have a server, you're able to order products and actually enjoy those products right inside there because it's actually illegal to use a product on the strip. People still do use it, but it's actually illegal to do that. And so this Dazed Consumption Lounge is driving a lot of traffic to the property. and it's driving a lot more money to be spent inside the property. Additionally, they opened up this $10 tattoo place, which is driving a lot of traffic. On the latest conference call, they mentioned somewhere around like 200 plus tattoos they're doing inside this particular tattoo parlor that's inside the Planet now at this point in time. So it's just driving ridiculous amounts of foot traffic. And the Planet has a lot of other things. They got a bar inside there. They got obviously restaurants and obviously the product floor, right? This is that consumption lounge. You go through this fun little telephone booth, right? And this is the line to get inside, and they're starting to take reservations as well. That business continues to build. But then back here, you have an immense amount more of space, essentially. And they're starting to get really smart with how they're using this space. So they got this kind of like almost like a museum that's going to be opening likely at the end of this year, which is going to drive a lot more traffic into the location as well. And then back here, I've heard they're doing everything from like some different UFC fight press conferences and different things back here, which is all just stuff driving more and more attention to this property, more and more traffic to this property, and people ultimately to buy stuff from the property, right? And then obviously they had their sales floor, which is pretty much set up to do unlimited amount of transactions. I mean, that sales floor is one of a kind. You'll never find a sales floor like that for the Jack Jackson product anywhere in the world. You can go to any Jack Jackson store in the world, you will never find something like that. It is incredible, right? And so that sales floor, I mean, the bottom line is a Planet's just got to continue to get more and more traffic into the store, because the sales floor will do more and more traffic. It's literally could hold anything. Like they could do any numbers there, right? They do these smart little things, like they have, folks at food trucks and whatnot that sell out front. All this stuff just drives revenue, drives traffic into the store. And I've been keeping kind of track recently, kind of looking at the store, right? And what I'm seeing is continually the store is the busiest I've seen it since the end of 2020 and into the, let's call it the first part of 2021. I haven't seen it that busy since then, essentially, right? And what we're seeing is just massive amount of taxis driving in constantly, Ubers, Lyfts, people getting dropped off, people driving in their cars. It is phenomenal to see, absolutely phenomenal. So that location in itself is going to start putting up some crazy growth numbers, and no one's really expecting that, right? And that's the type of stuff that you would only know that's even going on if you're doing like what I'm doing and basically tracking like what's going on here with the traffic. And I'm seeing it, and just wait till the next quarter numbers. You'll start to see it in the numbers, like, whoa, like this is fundamentally changed. You already got a glimpse of it this past quarter. Just wait till this next quarter. Your stocks are going to be knocked off, okay? So the moral of the story regarding the Vegas Superstore is we're back. And I think that it's building stronger than ever, because now we're not counting on, everybody needs stimulus to come to Planet. No, now we're building a sustainable Superstore experience that's going to be able to put up ridiculous numbers quarter in and quarter out, year in and year out, regardless if there's stimulus, no stimulus, anything like that, right? Now, additionally, the Florida opportunities just opened up for this company. Obviously, they made a big acquisition that closed here recently. They just announced they're going to be opening their 27th store. I believe they're going to be over 30 here very soon. And so that Florida opportunity is massive. I mean, absolutely massive for the Planet. And this could end up being a much bigger opportunity than even the Vegas Superstore, which the Vegas Superstore does so much volume. It's so massive. It's so important that it's hard to think of anything bigger than that. But these smaller locations in Florida are going to end up likely being way bigger. They have their Illinois property as well, which I heard is off to actually a pretty decent start. It sounded like they were pretty optimistic in regards to that in the conference call. Then they have their Orange County location Superstore, which has been a very big disappointment for the company. This was really their first major expansion, and California has a lot of issues. I think we all know that, around taxes, around a lot of different things. Okay, so the Orange County market's been tough, but according to what I heard from the CFO last couple of quarters, is that store's finally gotten to around break even, and they should start to build from here. So that's exciting. But the owned brands opportunity, you got to understand, for this company could end up being bigger than all the store opportunities. So you look at all these stores they've got open now in Florida. You think about the Superstore, right? At the end of the day, this might end up being the bigger thing for the company long term, is their own brands. The Haha brand that they own, Dreamland Chocolates, they own a bunch of these different brands, the different flower products they have. These particular products, I mean, think of it as, if you think about like the liquor industry, right? You could operate a bunch of bars, and that's cool, right? You can make a bunch of money off that. Imagine you're like a Yard House. You own the Yard House, right? You make a bunch of money off that. But what if you own all the liquor brands that are sold into all the bars, right? and all the popular beer brands are sold into the bars. That's a way bigger opportunity, right? Way more money to be made there. And so if we think about what the long-term biggest thing for the company, I think these own brands, because they might end up owning the Jack Daniels of Jack Jackson, right? They might end up owning the Budweiser and the Michelob of these particular products over the coming years. I don't think there's anybody more well-positioned, because you got to remember, they're building out their store footprint in such a massive way. Guess what brands are going to likely feature the most at their stores? Do you think they'd rather feature somebody else's brand or feature their brand, number one, right? Of course, they're going to, they're going to feature other people's brands as well, but believe me, there's always going to be a preference to their brands, right? So then people get accustomed to ordering these particular products from the planet, right? So it's absolutely genius. Now, we got to talk about the legalization subject. It's a very big subject. Now, we know if there's a party that's always kind of pushed back against legalization, it's always kind of been the Republican Party. But it looks like the leader of the party is really starting to get on board with legalizing this product. Trump backs Jack Jackson legalization in Florida if done correctly. And it seems like, listen to the commentary coming out of Trump, it seems like, honestly, he's flipping over to wanting legalization overall, which I can tell you is a big change for that party, because that particular party's never really been on board with legalization of this product. But when the big dog, when the leader of the party is starting to say, we're going to move this direction, everybody's going to have to move that direction, right? Then the other side, in terms of the other candidate, right, Harris, obviously she's for legalizing this product as well. So I think regardless of who wins the election, whether it's Trump or whether it's Harris, I think legalization looks very high probability that's going to play out. And I'm talking federal legalization. I'm not just talking about medical. I'm talking about recreational as well, which is going to be a pretty big opportunity, right? And remember, this industry becomes more and more important if you speak about an unemployment cycle starting to happen, right? We've seen recently unemployment starting to go up and up and up. Guess what? This is a massive industry. If you legalize this product, you're going to create a lot more jobs, Now, additionally, recently there was some bad news that came out in regards to the DEA pushing off the rescheduling of Jack Jackson. They pushed that out a little bit, right? And so they're likely going to start up again in December after the election's done, which is kind of disappointing, but government, they always kind of move slow in these things. But this is a major change when that does happen, and it is going to happen in my opinion, because it's 280E, and it's going to completely change the tax profile of these particular companies, and it's going to almost overnight make these companies immensely more profitable than what they are right now, okay? Because there's a bunch of different tax changes that happen when the rescheduling happens. So the moment that happens, they're overnight, their tax profiles completely change to become much more profitable companies, and that's going to help out the space in a massive way. The problem is there's going to be a lot of companies that have already gone BK by that particular time. The Planet likely won't be one of them, because they're one of the few that are actually well capitalized to get through this storm, right? Now, additionally, if you look at kind of what analysts are looking at here, they're expecting around 28% revenue growth this year and 39%. I think in regards to this year and next year, I think analysts are way too low. I think minimum 10 percentage points higher. Like this year, I'm expecting at least 38 to 45% growth based upon what I'm seeing from that superstore in Vegas, along with the Florida opportunity, right? And then next year, I think closer to 50% revenue growth for this company, if not higher than that. So I believe the analysts are way too low, and I believe people are going to get their socks knocked off when they realize the growth rates here. So my kind of looking at the planet here is this stock's a buy in September and October. Then we're going to see how the numbers look in November. I think by the time those November numbers hit, there's going to start to be so much hype that starts to build around the stock. It's going to be ridiculous, because I don't think anybody is ready for the sorts of revenue growth numbers this company's going to start putting up. Starting in November, I think it's going to shock people. And so we'll see what the numbers are, and then might continue to buy in December, January, and February. Now, the important thing to remember about the Planet, it's a speculative stock. So you got to watch sizing in regards to this. I keep Planet as a smaller position for me relative compared to, let's call it much bigger companies that are seen as safer, right? This is an under $1 stock. So I'm going to watch my position sizing. I'm not going to get too over leveraged in this one. I'd much rather look at the Planet 5 years from now and be like, oh, I should have bought so many more shares. I should have put so much more money in it, because look at how much money I made. I made a 10x, whatever, right? Then a situation where I put too much money, and then I look back and I'm like, oh, why did I put all that money? The management team ended up screwing up this and that and this and that, right? So far, the management team's done a heck of a job getting through some big storms and out to the other side each time, right? And I think it's going to be a very fun next few years. We'll see. But got to watch my position sizing on it. Got to keep it small, relative. And hopefully it grows into become a massive position. I've had a lot of those stocks over time, right? ELF's a great example. ELF was never a big position, but it became a big position because it went up so much. Tesla's a great example. Tesla was never a big position for me, but because it went up so much, it ended up becoming a big position for me. So got to watch sizing here, but man, I think it's pretty appetizing, and the time has come, baby. The time for the planet to shine has come once again. Stock number 2 of these 4 stocks is, just do it, Nike. Nike stock, okay? I've been buying the stock almost every single week for like the last several months, okay? This is a stock that I believe is going to be $150 plus long term, and I believe the stock is completely de-risked now at this point in time. Does that mean it can't go down in the short term for a month or two? No. That's sure, that can always happen, right? But in terms of talking about de-risk, it's like the big moves already happened in the stock in regards to down, right? And so I look at the stock in the 70s and 80s, buy. Now, important you understand this about the Nike story. This is one of the greatest brands in the history of mankind, right? And what we're looking at right now in front of you is this is like the top 15 big global brands that are most valuable out there, right? And the companies you would expect to be on this list are on this list, right? Apple, Microsoft, Amazon, Google, Samsung, Toyota, Mercedes-Benz, Coca-Cola, Nike, BMW, Mercedes, Tesla, Disney, Louis Vuitton, Cisco. These are sorts of companies you would expect to be the most valuable global brands in the world, right? How many of these companies do you ever get at a significant discount? It doesn't happen very often, right? Because these are the most well-known, most respected, most valuable brands in the world. So when you get those opportunities, you better take advantage. And this is a crazy rare opportunity in regards to Nike stock to make a lot of easy money here. The stock's down 2% in the past 5 years. That like never happens with Nike. Like on a 5-year basis for the stock to be negative, this is a rare opportunity. No, you got to understand, how did Nike get to this position? Like it doesn't just magically go down 2% over a 5-year basis, right? It got here for certain reasons. It got into the hurricane for certain reasons. And in order to get Nike stock to go down 2% over 5 years, you need like a perfect storm of all different things happening simultaneously to get this company like this to go down 2% in a 5-year basis, right? So one, obviously 2020, 2021, we had crazy stimulus pumped out there. We all know what it was, right? And the stimulus ran out in 2022. Then inflation destroyed the under 75K a year consumer, people that make 75K or less a year, which is a huge segment. And you remember, when you talk about a big global company like Nike, that's a company that everybody's their customer. Whether it's the kid that works a minimum wage job, whether it's the guy that drives a trash truck and makes $65,000 a year, or whether it's the, stock market YouTuber named Jeremy, he wears Nike as well, right? Like everybody can be Nike's customer base. And so this is a huge segment of Nike's customer base that got destroyed 2022, 2023, 2024 by inflation that went to levels that we have never seen in really most people's adult lives. They have never seen that sort of inflation. And it hurt the consumer bad, right? And so that hurts Nike at the end of the day. Then you had the China slowdown on top of that. China's slowdown has been a bad situation. Then we always think about inflation as just like a United States thing, or if you live in Europe, you think about it as a European thing. This is a worldwide phenomenon that's very negatively affected a lot of consumers out there, right? Around the whole world. Because it's not like it's just like inflation only affects one country. No, it affects everybody. And some countries have gotten hit way worse. In the United States, actually, we had it good compared to some of these countries. It's horrible, right? Then you had competition from Lululemon, On, Hoka. Lulu would be more on the clothing space. On and Hoka would be more on the shoe side, right? Competition's always a little bit of a weak excuse in my personal opinion, but there's no doubt that was a situation that played out, right? Then you had very slow innovation from this company in 2021 through 2023, which when I say slow innovation, I'm talking on the product side and the marketing side, right? And then you had a very rich PE on the stock. You go back to the PE ratio the stock was around 2021. It was very rich, right? And that's how you get a stock down on a 5-year basis. Fascinating, right? Now we got to say, how many of these things are still going on right now and into 2025? Well, the stimulus stuff, that's gone now, right? That's a story that played out that obviously started to negatively affect the company's numbers in 22 and obviously very affected them negatively in 23, right? That's an over story now. Inflation, destroying the consumer, that's no longer going on, right? Inflation is at normal rates now. We're in the 2s, which is where it should be. That's not an issue. That's good. China slowdown, I think that's still a question mark, right? China is going to be China, right? Worldwide inflation problem, that's starting to end as well around the world. If you look at inflation rates really around the world, that's starting to come to an end. So that's good for Nike. Competition from Lulu on Hoka, I think that's still a little ongoing, but we'll look at that on a case-by-case basis. Slow innovation, I think that's over now. When I'm looking at Nike's product innovation they've started to come out with here recently over the past few months. Their marketing campaigns are top tier. Like I was watching a lot of their Olympic marketing campaigns, which is always an important time for their marketing. You know, some of the best Nike marketing I've seen in years for that company. And so that's definitely changed. And the rich peas long gone with the stock now, right? And so the majority of these problems that caused the stock to go down 2% over the past 5 years are now gone, right? Now let's speak about competition. Lulu, this company is having a lot of its own problems now, right? The stock's almost been cut in half this year. Horrible performance, obviously, from Lulu. And keep in mind, their U.S. numbers just went negative for the company, which is something people thought could never happen in regards to Lulu. So Lulu's got issues, like real systemic issues. The only thing that's saving them right now is kind of their international business because they're so new international that business is growing very nicely. But I'm telling you, Lulu's got a lot of issues that they got to work through to try to save the U.S. business because that's going negative now for the company, right? Now, as far as On goes, there's no problems yet in regards to On. On numbers look very, very good, right? Keep in mind, I don't like using competition as an excuse because even when you look at a company like On's revenue, so small compared to somebody like a Nike, right? If we look at Hoka's numbers look great. Hoka brand net sales increased around 30% in their most recent quarters. No problems in regards to Hoka yet either. And you see me keep using the term yet, right? And the reason I keep using the word yet is because they don't have problems yet. They are going to have problems. On's going to run into a lot of problems and Hoka's going to run into a lot of problems. You know why? Because they all do and they always do, right? Think about Allbirds. Allbirds was all the hype a few years ago. Everybody and their grandma talking about getting Allbirds shoes. Man, if you lived in Silicon Valley, San Francisco area, it was like everybody wanted dang Allbirds shoes, right? That stock's gone down 97% in the past 5 years. And there's a lot of talk that Allbirds could end up going bankrupt, right? And a few years ago, you just never could have thought that was possible because the company was just, this incredible growth company, right? Under Armour has gone down 58% in the past 5 years. We think Nike's done horrible over the past 5 years, down 2%. Under Armour's down 58% in the past 5 years. Man, was Under Armour all the hype many years ago, right? And obviously those days are long gone. And so when you think about these Ons and these Hokas, I have no fear of them long term because they will fail. They all fail, man. They all end up failing when it's all said and done. They overexpand, they over distribute, and then what they end up doing, they produce too much product, they start having a discount, their brand stops being as cool, they don't put as much money into their brands as they should be putting in their brands, they start opening retail locations, that starts costing them a bunch of money, and these brands, they all go through the same cycle and they always fail, and it's just the way it is, right? Now, if we look at 1000xstocks.com here, this shows you, this is our fancy new valuation tool, right? Which you can adjust the revenue growth rates, the net income growth rates for the company, and the PE ratios of the company, right? On a low and high end. So what I did for Nike here is I think Nike in 2025 through 2028 is going to grow revenue on average about 7% a year, right? I think that's a very fair number. Could they grow a little faster than that some years, like 10, 12%? Sure. Could they grow slower than that? Sure. But I think around 7% is a safe number. Now, for net income, I do have it going up substantially in 2025, about 25%. And the reason being is they got a lot of cost-cutting measures going through right now. That's going to help their expense profile immensely in 2025. Additionally, on top of that, and we're going to talk about a revenue growth rate that I believe is going to be going up in 2025, so they're going to get a lot of leverage there. And I don't think they're going to have to do much discounting in 2025, which is going to lead to better margins for the company overall. So I think if you take all that into account, the net income should be much faster growth than the revenue in 2025. So I'm doing about 25% that year, and then after that, about 11% growth on EPS per year, right? Which puts them at a net income margin of about 13% in 2028. That's not crazy at all for a Nike, right? Now, PE ratios, 20 to 30 is a very fair number for Nike overall. So that puts the stock in 2028 somewhere between 114 at the low end and about 171 on the high end, which on the low end would give you a CAGR, a compounded annual growth rate of about 8%, and on the high side about 20%. Now keep in mind they might do share buybacks, so that might help the company as well, and the CAGR might end up being a little bit higher than where I'm at here. But this is what makes me feel so safe in regards to Nike, because I'm not taking a lot of risk, and I should get a very nice compounded annual growth rate on this company over the coming years. And if we look at the last 5 years, right, remember, Nike's underperformed the SP 500, not by a little bit, but by an immense amount. I think the exact opposite is going to transpire over this next 5 years. I think we're going to be looking at a Nike explode to the upside over this next 5 years. And I think we're going to look at an S&P 500 that's kind of like, okay over the next 5 years. And I think we're going to look at a Nike that massively outperforms S&P 500, which is a complete opposite of the last 5 years, right? And all of a sudden people are going to go, wow, Nike's a super company, a super compounder again, and people will view this company very different. And so I think that's exactly what will play out in the next 5 years. And yeah, if I had to bet my entire net worth on either the S&P 500 outperforming Nike or Nike outperforming the S&P 500, I'd bet it all on Nike outperforming the S&P 500 over the next 5 years. Okay, so that's Nike there. Beautiful, beautiful, beautiful. And I'm just buying as much as possible. You may say, well, I can't perfectly time this, right? Why not try to perfectly time? I'm not going to be able to perfectly time. I've got to just build the position. That's why you see me buying week after week. And if I look at almost all my big six in the public count, I think almost all these stocks I was negative on at a particular time. So the fact that I'm down 13% on Nike, I'm 0% worried because of where I believe that company is going over the next few years, right? Like Meta, we're up 684,000 on. Tesla, 317,000 on. PayPal, $30,000. Amazon up $75,000. Palantir up $125,000. Elf up $142,000. I believe on almost all those stocks, if not all those stocks, I was negative at a particular time. I was down on my cost basis, 5, 10, 15, 20%. And we all know what ended up happening at the end of the story. So when I look at Nike, I think this is just another example of a great company that I'm getting great pricing on, and I think I'll make a ton of money on, and it's negative right now, and it is what it is. Stock number 3 of 4 that has immense upside over future years is Winning Resorts. Tremendous value in this one. Tremendous value. This is a stock that's down about 20% in the past year. I believe this is a $76 stock here today. I believe this will easily be a $200+ stock long term, okay? Now, to understand Win, you got to understand the history behind this company. It is very important because I can't just show you like a few numbers and be like, here's Win Resorts. You got to understand the history to really appreciate the stock and really understand why the stock has so much upside ahead, okay? So Win Resorts is built by this man. If you don't know who this man is right here, that is Steve Wynn. Now, Steve Wynn is a legend in Las Vegas for what he did over time. And honestly, he's one of the most legendary businessmen I've ever seen, right? And Steve Wynn has the respect of anybody that ever was built resorts that were successful, hotels, buildings. They all look up to Steve Wynn as the leader, as the alpha. And the reason being is that man had incredible taste. He had incredible ability to design and such an incredible vision that other people just to be quite frank, they don't have, right? And if I think about like everybody else that really builds like resorts and hotels and things like that, it's one thing you can get a lot of money funded together, right? And you build that. And you build a big building, right? And it looks kind of modern or something like that. But at the end of the day, how many truly have taste, great design, and are visionaries, right? That's why everybody that was really respected in the resort industry over time all look at Steve Wynn as a guy on the Mount Rushmore, as kind of like a leader, because they realize they don't have that super talent. He's like a superhero, I would say. Literally, he's like a superhero in the resorts industry. Now, when it comes to Steve Wynn, he got his start by basically, he made a bunch of money basically by buying this piece of land that was close to Caesars, then kind of saying he was going to build a property next to it, a small casino, and he never ended up doing that. And he got Caesar scared. Caesar ended up buying the piece of property, which, by the way, he bought that little piece of land, if I recall. He bought it from the one gentleman, who's the guy I'm thinking of, right? He had the airplanes, he owned a bunch of land. Oh, what's his name? Oh, I'm trying to think about it. What's his name? Oh, man, he owns so much land here in Vegas. Howard Hughes, right? So he bought that piece of land from Howard Hughes. Then he kind of scared Caesars that he was going to build this little casino on it. Caesars got scared. They ended up buying it from Wynn, and Wynn ended up making a bunch of money. He made like $687,000, which back in 1972, like that was a lot of money, right? And he ended up acquiring a majority stake in Golden Nugget. And he ended up building Golden Nugget into a successful property, which had been a property that was having some trouble. And he even got Frank Sinatra to be in commercials. It was fascinating, right? From there, he ended up going to Atlantic City. So Atlantic City in the 1980s, was Atlantic City a party in the 1980s? There was so much money to be made. They were making so much money, they had the money in crates, from what I heard back in the day. It was ridiculous how much money they were making back then. It was insane. So Atlantic City was real hot in the 80s. He built Golden Nugget in the 1980s. Super successful, right? Then he sold that in 1987 and he pocketed about $440 million, which took him from like, oh, he's doing really well for himself, right? To like, oh, he's super rich now at this point in time. From there, he ended up basically using that money along with a bunch of junk bond money to build the Mirage, which was at that time back in the late 1980s, there'd never been anything on the Las Vegas Strip like that, where you had this incredible lake with these volcanoes that were exploding and this insanely huge hotel that was ridiculous, right? And, it was extremely beautiful for the 1980s as well, how everything was done. Never seen anything like that, and it was an ultra success. They were making so much money, it was ridiculous, right? From there, he built Treasure Island, which had this pirate show in front of it and all that sort of stuff. And from there, he took it super high end. He built the Bellagio, which the Bellagio still to this day, even in 2024, one of the most iconic resorts in the world, right? The Bellagio, absolutely one of a kind. You could say that name, and people will know that from around the world, absolutely famous, right? Now, from there, he ended up selling his Mirage company to MGM, right? Which he owned the Mirage, Treasure Island. He owned a property, I believe, was in Biloxi, Mississippi, or something like that. And then he owned, Bellagio, right? Treasure Island, Mirage. And he ended up selling that and ended up making about $500 million from that deal back in 2000. From there, he took that money and investor money and kind of pooled that together and started Wynn Resorts, which was going to take things to the highest of the highest level. This was an attempt to beat Bellagio, and he did it. He did it. He really did it, right? Beat the Bellagio. From there in 2009, built the Encore, then ended up opening right into the great financial crisis, which was about the worst time in history you could ever open a resort in Las Vegas. Disaster, 2009, right? But did he spare an expense in Encore? No, he still built everything top tier, luxury, beautiful, perfect design, perfect everything, right? And it wasn't great numbers for the first couple of years, but that's fine. And it built over time, right? And those are two of the most iconic properties on the Las Vegas Strip nowadays. They have the beautiful award-winning golf course right behind those properties as well. From there, he built the Macau properties. Macau was like the new Atlantic City, so much money to be made, but like on steroids, like so much money to be made in Macau, right? Wynn in the Encore property on the old part of the Cotai, or the old part of the Macau area, right? And then the Cotai Strip ended up building Wynn Palace, which opened in the mid to late 2010s. And this is like kind of his Bellagio of the Macau region, and then the Asia region, right? Then from there, they opened the Encore Boston Harbor property, right? Which is, it's a stable property. I think Wynn had a bigger vision there of, they were going to do better. And I think it was kind of like what the planet is for their Orange County building property. I think that's kind of what Encore is. Like, it's cool, it's a moneymaker, but it's not like they thought it was going to be a big success. From there, acquired the land right across from the Wynn and Encore on the Las Vegas Strip. And then Steve Wynn got ousted from the company in 2018. There was a lot of allegations for years around Steve Wynn from a lot of different women on what might have been going on behind closed doors. We don't know. At the end of the day, there was no, really camera proof behind what was actually happening, in different massages and things like that. So anyways, he got kicked out of the company forever. He really has nothing to do with the company, but it's important you understand that Steve Wynn is very similar to Steve Jobs in the sense of what Steve Jobs meant to the mobile revolution, to computer industry. I think Steve Wynn really represents that in the resort industry of just understanding stuff, being a visionary that people couldn't understand. Like, people would look at things that he would spend money on and be like, why would you spend so much money on this one thing? And he understood it's because it's going to attract a lot of people with very high net worths. And that's going to end up making a lot of money long term. And other people just couldn't understand that, couldn't fathom that, right? And he understood better than anybody, and that DNA is still in the company. Now, he probably got out at a really good time, I'm going to be honest with you guys, because shortly after he got ousted from the company in 2018, we had Rona, which obviously shut down Macau and it shut down the Las Vegas Strip. Who could have thought that was going to happen? And then 2022, 2023, we had the highest Fed rate hike cycle in 20 plus years, right? It was technically the fastest rate hike cycle in the history of the Federal Reserve in terms of on a percentage basis. Crazy. And that's not a good thing for the resort industry. And the reason being, if rates are really high, then to refinance properties or something like that, very expensive, very costly. If you're going to build new properties, and you're going to do it on debt, which usually these companies do, very expensive. So a lot of people don't want to own these sorts of companies when they're in a, let's call it Fed funds rates expensive, and it's hard to get money, your hands on money, and especially at decent interest rates. Now, the recovery for Wynn looks absolutely phenomenal. This is a sort of graph you want to see coming out of that Rona lockdowns, and obviously the Strip being closed and Macau being closed. This is exactly what you want to see. So recovery's been great for Wynn. They've been executing on a high level nowadays, right? And additionally, they got the property in the Middle East they're building out right now, which we don't know how successful that property is, but we have a pretty good understanding that it's going to be very successful. And they're not just the only ones financing and building that property. They're only taking on a portion of the expense cost profile of this particular property, but I would say there's a pretty high probability this property will end up being very successful for the company. There's so much money in the Middle East, it's ridiculous. And there's really nothing that exists in the Middle East like this right now. And so that's a very exciting opportunity, but that's not going to open for a few years, okay? They also additionally want to build this property in New York City. We'll see. We'll see. Obviously, Manhattan, with how much big money's in Manhattan and how much money travels into Manhattan, it could be an incredible opportunity for Wynn. And the sorts of rates they'd be able to command on a hotel room here, I think everything would be $1,000 plus a night in this particular hotel. I think it would start at $1,000 and move up because New York City is so expensive. But at the end of the day, does this ever get done? I don't know, man. We'll see. We'll see. Don't get your hopes up about that. New York City has a lot of problems. We know that, right? Now, it's important you understand about the resort industry and how these companies are taxed, because you got to understand depreciation matters significantly for these companies. I mean, significantly. All businesses can have some sort of depreciation pretty much, right? But in terms of resort companies, it's on a way larger number when we're talking about depreciation. And so it helps and hurt companies, and I'll explain, okay? One, this obviously makes you pay a lot less taxes because on your income statement, you basically write off the depreciation, which we'll look at when it's an immense number, and that essentially allows you to pay less in taxes, which is good if you're a company, right? But it makes you as a company not look as profitable as you really are because you're taking some sort of huge expense, which is kind of an expense, but kind of not really an expense. It's not like an out-of-pocket cash expense. It's like if you pay somebody a salary, right? Of $2 million, that's a true expense. Like it's $2 million out of the company's pocket to go pay this person money. Depreciation doesn't really work like that, right? So it can make a company look a lot less profitable than it really is. So look at this here, okay? This looks at Wynn Resorts' latest income statement here. You see depreciation and amortization, $176 million. That's just a crazy number, right? And so their net income for the company, $246, net income attributable to Wynn Resorts Limited, $111 million. Keep in mind, if it wasn't for that massive depreciation and amortization number, right, they would have been way more profitable than really what it looks like on the bottom line, right? So if we go ahead and take a peek here, for resort-related companies, EBITDA matters more. This is earnings before interest, taxes, depreciation, amortization, and rental restructuring costs, okay? This is arguably the most important number and metric you can ever look at for resort-related companies and for a company like Wynn Resorts, which is why Wynn Resorts specifically provides some slides showing what their EBITDA is like, right? So if you look at the latest 3 months, they had $571 million in EBITDA. And if you look at the past 6 months, $1.2 billion. Oh my gosh, okay? That's a huge, huge number there. Now, if we think about Wynn Resorts, it's an $8.5 billion market cap. And they've got $1.2 billion in EBITDA just in the past 6 months, right? The value proposition here is very compelling, very compelling. I mean, if Wynn Resorts was an $18 billion market cap, I might not feel as strong. But at an $8 billion market cap, oh baby is this an attractive value proposition here, right? Now, Craig Billings, right? He's the CEO of the company. Now, I would have assumed after Steve Wynn left the company, I would have assumed there might have been a fall off in regards to Wynn Resorts' customer service levels, quality, right? The upkeep of the properties, things like that. And you know I live in Vegas, right? And I can go down the Wynn anytime. Right after recording this video, if I want to go down the Wynn and eat at the restaurants or go to the bars or whatever, right? I can go do that. I go to the Wynn many times per year. I have seen zero fall off in customer service levels, the quality of the properties, the upkeep of the properties, zero fall off. If anything, I think in the recent years, I've actually seen an uptick of like, it's gotten better. And that is pretty dang shocking because you got to be a little fearful after Steve Wynn leaves. But I also think about what Steve Wynn really enjoyed. Steve Wynn did not really enjoy the running of the properties. He enjoyed the designing of them, the building of them, the opening of them, right? And that's why you saw him continually over the years leave right after he had opened his best properties, right? Because that was really the process he enjoyed. And so he wasn't necessarily the guy that loved to run the business. He was the one that loved to design and create these spaces that would make everybody say, the visionary, that make everybody say, wow, this is the most beautiful resort I've ever been in. This is incredible. This is like nothing I've ever seen, right? That was him. And so it seems like the quality of the property being run is actually even at a higher level than back in the Steve Wynn days, which once again is pretty dang shocking to me because I pay attention to every little detail in these properties. And so that's really good to see. It makes me feel very comfortable. Now you may say, what if? What if the recession, right? What if the recession hits? Here's the deal, okay? Listen, two things. Everything's cake after 2020. Like, nothing is worse than you being forced to be closed down. And remember, in terms of Vegas, Vegas was closed for several months. And then when it did open back up, it was like a fraction of what you were allowed to basically have at your properties, right? They had to run at like 50% occupancy levels and those sorts of things. Macau was basically on and off closed for several years. There's nothing worse than that. That is the worst. I mean, if you could ask the leadership of Wynn Resorts, what would you rather have? Go through another 2020? Or would you rather deal with a recession where unemployment goes to 10%? Any day, they'd rather go to 10% unemployment. You know why? Because there's still going to be a bunch of rich people with customers that will gladly come to their properties and vacation. And so that's, something to kind of keep in mind. They've already been through the worst. Additionally, if there is a recession, we know the Fed's going to lower interest rates massively. They'll go down to 0% Fed funds rate or 1% or something like that, which will obviously bode very well for companies that have to take out a lot of debt like Wynn Resorts. And so this is very good. Now, additionally, if we look at Wynn went through a crazy time period of outperformance in S&P 500. And that time period was back 2009 through 2014. I believe we're going to go through a very similar period, 2025 to 2029, in regards to Wynn Resorts, where you're going to see this company having significant outperformance versus S&P 500, and it's not even going to be close. It's not even going to be close. It's like Wynn's going to win by a mile. And I think that's exactly what's going to play out over the next few years, and it's going to be fun. It's going to be fun in regards to Wynn Resorts. So, yeah, I like this stock a lot, and I like it for not only the next, let's say, 12 to 24 months as the Fed starts lowering rates. I like it really for the next, I would say, 5 years. Just to be quite frank, I think it's going to be a fun ride. A volatile ride, but it will be a fun ride in the end, right? And so, buying shares. Next stock up here, number 4 of these stocks that have some pretty big upside ahead is SoFi Technology. This is a stock that's in the $7 range right now, okay? I call SoFi Mr. Limitless. And the reason I call it Mr. Limitless is this company really has unlimited long-term upside. And the way you got to think about SoFi, so all these other companies, I really talk about them in terms of the next 3 to 7 years. In regards to SoFi, really think about the next 10 to 20 years. You got to think even longer term in regards to SoFi. And it's because the numbers and what I'm going to show you is playing out here, okay? And so Mr. Limitless, here's the deal with this company. They're stealing market share left and right? And here's the deal. Over the next 5 to 10 years, if they keep attracting these levels of new members and customers to their bank, they're going to become a banking giant over the next 5 to 10 years. Like, just start running the numbers. Even if their growth rates slow down to attracting 30% of customers a year and then slow down to a 25% and 20%, you're going to see over the next 10 years, this company becomes a banking giant. Whereas right now, they're like a little guy, a little under 9 million members. As of today, I bet you they're probably above 9 million members, but that's kind of seen as a little guy. Run the projections and the numbers over the next decade, and you're going to find they're going to have tens of millions and millions and millions of customers overall, right? And so they're on their way to becoming a banking giant. Now, additionally, they're more than just a new age bank, right? They're also a tech platform. Galileo, obviously, if you're somebody that wants to get into the fintech industry, run your own financial institution, Galileo is a great company to deal with in terms of helping you do everything you got to do to really run that business. And so in regards to Galileo, they keep attracting more and more accounts up to 158 million. So you're getting a bank plus a tech stack, really, is the way I kind of think about SoFi. Now, additionally, look at the trailing 12-month revenue for this company. Is that not one of the most beautiful charts you would ever like to see? Like that is as beautiful gets, man. Like that is like literally, if I asked you to draw out a perfect trailing 12-month revenue chart over a few year span, that's exactly how you draw it up. Just up and 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 up. Beautiful from SoFi, right? Now, the additional thing that SoFi hasn't gotten credit for is this company went from a huge money loser. They were burning money left and right to a money maker now, right? They flipped over to profitability in regards to their net income, and it's substantial. And I feel like people aren't even paying attention to that. I'm like, you realize this is like one of the biggest things to ever happen to this company. It's one thing to be attracting a ton of members. It's one thing to be bringing in a ton of revenue, right? It's another one to start actually making money on your bottom line. And that's what the company's done. Anthony Noto has been nothing but very impressive running this company, getting it through some very tough times, including when the government said student loans didn't have to be repaid and all those sorts of things. And that whole situation very negatively affected the company. He's gotten this company through 2020. He's gotten this company through these super high interest rates. We've seen plenty of regional banks go under in regards to this, and yet SoFi's made it out to the other side. And remember, Anthony Noto, prior to becoming the CEO of SoFi many, many years ago, he used to be the chief operating officer at Twitter. He used to be a managing director at Goldman Sachs. He used to be the CFO of the NFL, right? And so he's got a very impressive resume, and I've seen him do very impressive things since he's been running SoFi. Now, this is why I say you got to think longer term with SoFi and why it's called Mr. Limitless. Here's the deal, okay? If you're a financial institution, if you're a bank, what's the two most important things to you over time, right? Attracting more and more. There's really, I would say, three really important things if you're a bank over time, right? A financial institution. One is don't go bankrupt. You got to avoid bankruptcy. You're going to have recessions. You're going to have tough economic cycles. You're going to have the Fed changing things. Don't go bankrupt in those situations. Always keep your leverage ratios in a good place so you don't go under, right? Additionally, you want to always be adding more customers, more members to your company, right? Taking more and more market share. And three, you want your members and net worth to go up over time, so then you can loan them bigger amounts of money over time, right? So instead of somebody buying, taking out a $15,000 car loan for some used, Toyota or something like that, right? Hopefully over time, they want to buy, a Model X, right? That's $85,000 or something like that, and they take out that loan with SoFi. That's what you want. Their net worth's going up. Instead of getting a $300,000 mortgage, you want them coming to you and getting a $780,000 mortgage, because you're going to make a lot more money off that. It's a numbers game. So you want to attract more members, you don't want to go bankrupt, and you want your net worths of your people to go up over time as they age, so you make more and more money from loaning them money over time, right? That's what you want. And so if I think about SoFi, how do they become a giant financial institution? There's countless banks that have, $100, $200 billion plus market caps on them, right? I mean, this is the top 10. The smallest of the top 10, $163 billion market cap, right? The biggest of the big dogs is JP Morgan at a $639 billion market cap. How do they get onto this list over the next 10, 20 years and become that 10x, 20x, 30x stock? It's exactly what I just ran you through, right? Grab market share. Keep attracting more and more millennials to your product. Keep attracting Gen Z, which I think Gen Z is going to be a phenomenal adopter of SoFi overall, because SoFi is really digital first, right? And I think that's going to be very attractive to Gen Z. And then Gen Alpha, once they start to age and get into the banking system, attract those folks. And then guess what? The millennials will age. They'll get to their 40s, 50s, high net worths, right? They're going to, take out more and more loans from you over time that are going to be bigger amounts. Gen Z, same thing, as their net worth grows, and Gen Alpha as well, right? So that's what they got to do. And then just don't go bankrupt in the bad times. And I think they can get on this list of like the biggest banks in the world. And that's going to be a fun whole experience there. Okay. Appreciate you guys joining me as always. Thank you so much. I hope you really enjoyed this video. I hope you got a lot of value out of it. If you need help in the market, you're not feeling very confident in your decision making, you don't really know what you're doing, you kind of feel like you're more gambling money around rather than investing your money, click the pinned comment down there, fill in an application to join my private stock group, private wealth group, get access to 1000xstocks.com, take your game up to a much higher level, so when you go to make your investment decisions with your money, you feel more confident that you know what you're doing out there, you know how to decipher these sorts of things, find out if stocks are undervalued, overvalued, and all those sorts of things, okay? Appreciate y'all joining me as always, much love, and have a great day.